Thank you very much, Mariut. And now President Hoyer for your address. Thank you.
Ladies and gentlemen, Mesdames et Messieurs, meine Damen und Herren, thank you very much for your interest in this press conference this morning. It's a pleasure to be with you as the European Investment Bank, the EU Bank Group, announces these impressive results for 2016 that you have just heard. It has been a year of great changes. Indeed, it is just 2 days since the weekend that changed the world order. At such a moment in history, uncertainty about the future can cause difficulties for long-term investment projects. It is at times like this that the role of public investment bank like the EIB becomes even more relevant. Amid all the uncertainty, I'm certain I can demonstrate that in the case of the bank, these changes are a source of optimism and confidence for Europe. We are confronting major challenges, and we are doing so successfully. Looking ahead, we must and we will make sure that 2017 is the year of innovation for the EIB Group and for Europe. And I will tell you today about some of the financial structures and deals the EIB has built to lay the foundations for this innovative future. In 2016, the EIB Group enhanced its global role both in investment and in engagement with other multilateral investment banks to support Europe's global responsibilities at a time of uncertainty. This matters now more than ever, as multilateralism is dangerously called into question. I'm convinced, less multilateralism would weaken our societies and increase instability. It is urgent that Europe reaffirm its commitment to integration, openness, and global competition. The EIB Group plays a leading role in the community of international institutions, and within Europe, we are a key player in delivering the very benefits that I believe will ultimately convince Europeans they gain more from membership in the EU, from living as one, than they would if the EU did not exist. This means we must demonstrate the very real, tangible impact we have and deliver a strong, persuasive and inspiring European success story to citizens. In everything we do, we have an eye on economic inclusion, and we need to ensure Europe works for everyone. The headline part of the EIB's activity in 2016 has been a stronger contribution to investment across Europe. The Deputy Secretary General has just outlined our group financing for 2016 was 83.8 billion euros. That is supporting and mobilizing a phenomenal 280 billion euros of total investment in a single year. If you remember the slide you have just seen where this development is visualized, you can see that basically we have made more out of less. And this is really a remarkable story. This triggered investment has been growing quickly in the past few years. It is the result of our drive to use money more smartly, combining EU funds and grants, EU group financing, private capital and advisory support from the EIB's experts to achieve the maximum positive economic impact. One can already say now that the courageous idea of the European institutions, in particular the Parliament, Commission, Council, to shift money in the budget from grants and subsidies to guarantees and loans has been very successful and effective. And I believe that this idea of better spending, better use of scarce budgetary resources could be and should be expanded to other areas of the EU budget. Europe needs investment to meet the challenges of a changing world economy, and our investment makes a difference. Our recent modeling of the impact of EIB Group funding on Europe's economy for the 2013 to 2015 period shows that we are doing just that. Why am I talking about 2013 to 2015? That's a couple of years ago, yes. But we have to be serious and methodologically clean. And this is why you cannot expect impact figures 1 month after a year has been concluded. So this is why we looked at what had happened with the capital increase our shareholders granted us for 2013 to 15. made us use a refined version of a model developed by the European Commission's Joint Research Center in Sevilla. And we calculated there the investment will result in 830,000 new jobs and an additional 0.8% on Europe's GDP by 2017. And I think methodologically these figures are cautious. The EU Bank is a long-term investor, and EIB Group financing takes time to bring measurable effects. But when it does, these are considerable. More so in the still longer term. By 2030, the Institute in Sevilla and our own economists calculate our investment will have brought 1.4 million additional European jobs and increased GDP by 1.1%. We are modeling the impact of the EIB Group's work under the Investment Plan for Europe, the new big initiative now, and we plan to make first results available in the course of this year. I believe, and we have clear indications, the results will go in a similar direction. Our economics department has also completed an unprecedented, extensive study or survey of investment by European companies. This survey went into deep analysis of responses from, believe it or not, 12,000 companies, ranging from micro to large, or very large, in all 28 member states. It found that private investment is slowly picking up again, but both substantial quantitative and qualitative gaps remain. A considerable proportion of European companies say they invested too little in the recent past. Almost half of them say they lack state-of-the-art assets as a result of underinvestment. And not many plan to invest more next year than the last. What these findings tell me is that much more needs to be done to address Europe's investment gap. And this is why the Investment Plan for Europe is so important. Investment gaps are not going away by themselves. And if they remain, they have a serious impact on productivity and growth potential for Europe. And that means then for competitiveness. In this context, our 2016 performance on SMEs is extremely encouraging. Our subsidiary, the European Investment Fund, has made highly effective use of the Investment Plan for Europe to speed financing where it counts most, in youth unemployment or youth employment, and innovative startup companies. SMEs received 33 billion euros of support from the EIB Group. 33 billion euros. That is more than a third of our total activity. I'm most proud of the effect this financing has on young people. In 2016, we financed 46 education projects to the tune of 3.7 billion euros. Our financing improved conditions for 890,000 students. That includes 500,000 school children in Italy alone, where schools benefited from almost 1.5 billion euros in EIB financing over the last 2 years, with 530 million euros of that in 2016. EIB Group financing sustained 4.4 million jobs in SMEs, which is where most young people find work. Since its launch in 2013, the EIB's Skills and Jobs Investing for Youth program has provided more than 37 billion euros towards projects that support jobs and better skills for young people. These are concrete results that show the impact of our work on Europe's future. It is wise that the European Council is keeping youth unemployment on the agenda. It will be one of the key issues in 2017. And we look forward to working with leaders and governments to address this fundamental issue. But the EU Bank's investment in infrastructure is equally important. Fiscal constraints have meant that public investment in infrastructure has decreased across the EU since the economic crisis. Infrastructure is essential to business and productivity. And at a time of shrinking public expenditure, EIB infrastructure financing is essential to help ensure all companies, large and small, old and new, find and sustain the confidence they need to invest in their future here in Europe. From this point of view, every part of EIB financing is complementary to the others. Investment Plan for Europe financing for smaller, new, higher risk projects complements other facilities run by the European Investment Fund and much needed EIB investment in infrastructure. This bank has global impact, of course. You wouldn't know it based on today's temperature, but 2016 was again the hottest year on record, reminding us that climate change needs urgent action. EIB is the leading provider of climate finance. In particular, we stand by a pledge made with all multilateral development banks, and we were the driving force behind that, to work together to raise the private finance that will be needed to combat global warming, or better, the impact of global warming. Public funding alone will never be enough to tackle climate change, as the world's by far largest multilateral public bank, roughly twice the size of the World Bank, by the way, the EIB Group recognizes it has a special responsibility to do more of what it does best, catalyze private investment for climate action and sustainable development. Also here in the field of climate change, renewable energies, environment, we are the crowding in bank. We first set a climate action target for our lending in 2010, and we hit our targets every year since then. We will continue to do so over the next 5 years. We are determined to deliver $100 billion of climate action finance, the largest contribution to climate action of any single multilateral institution. And I believe this kind of leadership on climate issues is crucial right now. Last week at Davos, President Xi of China urged all countries to stick to the Paris Climate Agreement. It is heartwarming that it's nowadays the Chinese who are reminding us of the importance of that goal. It took us quite some time to convince them of that, but now they're leading. It's amazing. With the change in the world order last weekend, we Europeans must lead the free world against the climate skeptics. In 2016, migration to Europe from neighboring and distant countries continued, and so did the challenge this poses to the European Union and its member states. The EIB Group also continued to participate in the response to this challenge. In particular, we can and do help make the source countries of migration more economically resilient. That, of course, would make it less likely that people would be forced into the heart-wrenching and often dangerous journey away from their homelands. I announced in September that the bank would commit an additional €6 billion to support refugees and host communities in the Middle East, North Africa, and the Western Balkans. Along with our other activities in these regions, we believe this delivers a total investment of €35 billion by 2020. Just to give you an impression of quantitative relations, the overall exposure of the multilateral banks in the Mediterranean, the Middle East, is roughly €100 billion. 40 of these 100 billion is EIB alone. The World Bank around 30, the others below 10 billion euros. So we have a role to play. If we wish to fully tackle the migration crisis, we must also engage more in Africa. The EIB is a major player on the whole continent with 2.1 billion euros of financing provided on the continent in the last year and over 10 billion euros over the last 5 years. You can see the vector is going clearly up. Alongside the Commission's external investment plan, which aims to encourage investment in Africa and the EU neighborhood, we must work on projects in Africa that will draw in the private sector. And there we are important again as a crowding in bank, translating and refining the financial instruments we created for the developed world so that they can be applied to developing countries. Otherwise, its population growth will be unsustainable in the long run. Development policy must truly shift from global social policy to a strategy for global growth and prosperity. We must give people everywhere hope for their future in their own country. And the same should be said of Europe. Cohesion throughout the continent is our mission. By the way, it's the basis of the Treaty of Rome when it mentions the EIB. In 2016, we can say we have remained true to our mission. Measured as a percentage of GDP, the biggest share of EIB Group deals in 2016 went to Estonia, Malta, Bulgaria, Cyprus, Croatia, Poland, and Slovakia. So far about the regional distribution of our activities. We are very satisfied with that. We are working to ensure prosperity is spread fairly across the whole continent. And this is also true for our eastern neighbors. In 2016, we delivered on our commitment of 3 billion euros of support for Ukraine as part of the Union's 3-year 11 billion euro assistance package. Within the European Union, the Investment Plan for Europe has come to the end of its first full year of life. It has helped us support investments in offshore wind farms and major energy efficiency programs. Crucially, it has allowed the EIB Group to finance small deals with companies that would not have crossed our radar screens before the EU budget guarantee. The European Fund for Strategic Investments came into being. We are now producing an ever larger number of deals in quasi-equity and risk-sharing structures. As Mario Santoni already mentioned, last year, 3 out of 4 of our investment plan clients were new to the bank, and many were relatively small, untested companies. Quite a departure from our past. This is additionality right there, an ugly word that defines an important concept. The Investment Plan for Europe should allow the EIB Group to do more deals, and in particular deals that are different from business as usual. We now reach parts of the economy where we were not present before, sectors we would not have reached without the budget guarantee, and we work with people we never worked with before. Many of these partners, many of these companies are true innovators. Without innovation, Europe will not become and remain competitive, and the EIB has always aimed to be the innovation bank. Take one of the most vital sectors in innovation for Europe's future, software. In 2016, our financing for European software companies rose from 102 million euros in 2015 to 659 million euros in 2016, still going up. At the same time, we tripled the number of software companies to which we gave loans. And that's a very impressive increase. Much of this comes from the Investment Plan for Europe, and much from the EIB Group's other business. These loans help to build the innovative software that will allow European companies to compete in a world where every element of the industrial process will soon, or it has already been, digitalized, requiring very advanced cloud computing facilities and cybersecurity. And Europe's weakness is not only broadband connections to the last meter, it is also cloud computing facilities and cybersecurity. We must enable ourselves to process our own data, and this is not guaranteed so far in the European Union. By financing research into new technologies, our investments in innovative companies have the power to change lives. Sometimes they have the potential to save lives. To give you an example, last year we financed a family business producing satellites, OHB, a German space company, family-owned, based in Bremen. Got a 30 million euro loan backed by the FC guarantee to work on a next-generation satellite powered by electricity rather than heavy chemicals. This should transform the cost-effectiveness of satellite-based communications by allowing each satellite to carry much less fuel and, on the other hand, much more communication equipment. Another example, the EIF invested 20 million euros, again backed by the FC guarantee, in Quadrivium, the first fund investing in companies founded by French university scientists. One of Quadrivium's companies, PEP Therapy, is working towards a targeted cure for cancer that will not harm healthy tissue, as is the case with chemotherapy. And then, of course, we also invested 231 million in an upgrade of the Large Hadron Collider at CERN, the European Organization for Nuclear Research. CERN's research is on a very high theoretical level, but it has already resulted in some spin-out startups. Its results position Europe at the forefront of developments in computing and engineering, and the EU Bank is proud to have been part of this since our first loan to CERN in 2002. Now we are looking at an extension of the Investment Plan for Europe and the EU budget guarantee, which will extend EFSI's original target to 500 billion euros by 2020. After the first full year of activity, we are over halfway towards delivering on the plan's original target of 350 billion of mobilized investments by 2018. The plan is working very well. for some of us, surprisingly well. It is the right thing to do, and we should continue doing it as long as it is necessary to relaunch investment in Europe, and I'm afraid that will take a while. The Investment Plan for Europe projects carried out by the EIB Group have taken the bank on an incredible adventure. The European Parliament and the Council showed vision and courage in seeking to use scarce public resources, EU budget money, to do more than just give grants. Instead, they entrusted it to us, asked us to make loans and crowd in private capital, ensuring we put money to work in Europe. We are doing this in good cooperation with the European Commission and with great success. But it is a long battle to counter the investment gaps our continent faces. We must never forget that the EU budget guarantee on its own is not enough. If we want to boost innovation, create jobs, and make Europe competitive worldwide, investments backed by the EFSI guarantee are necessary but not sufficient. They cannot do the job alone. The third pillar of the Investment Plan for Europe, regulatory reform, is vital. As President Juncker has announced on the very day he presented the idea for the Investment Plan for Europe to the European Parliament. It was clear from the beginning, without courageous regulatory reform, we will not succeed. According to companies we surveyed, the main barrier to planned investment is not the economic climate or business prospects in their sector. It is uncertainty and the political and regulatory climate. We are so used to talking about the EU internal market that we end up thinking it is all actually there, perfect and complete. Well, it is not. Roughly half of Europe's GDP is produced and distributed along the rules of the internal market. Not more. The EU is still far from being a harmonious, coherent, barrier-free, investment-friendly place. Instead, investors struggle every day to navigate the diversity and lack of consistency of rules across borders. The EIB Group is hard at work to catalyze private financing and attract or crowd in investors to support good projects. But 2017 must be the year when regulators and legislators at national and at EU level come together to accelerate dramatically the pace of reform. The EU Bank is contributing to the European debate around regulatory reform by providing research based on our experience with investment barriers to projects on the ground. To be clear, this is not about deregulating, but about making regulating or regulation effective. Clear, simple, consistent regulation is a crucial enabler of investment and growth. And without this, I fear the investment plan efforts may not be enough. Of course, in 2017, regulatory reform is far from being the only aspect of European integration that will be up for debate. Still, I'm optimistic. I think Europeans will make the important choices that confront them in this very year wisely. The EU Bank is with them. We will continue to step forward whenever the crisis hits. Our work in 2016, for instance, had a great impact in Greece. In Cyprus, we have contributed strongly to the island's success with investment, believe it or not, that is equivalent to 15% of that country's GDP. We are ready to support vital investment needed for a possible, much hoped for, unification of the country. Because that is what we do. Each of our investments creates links between people, between businesses and economies. We make our continent more united, and there could be no more important role to be played right now. Thank you very much.